All right, Adam, we were talking a little bit about VIX and trading the VIX around as a trading tool. VIX now, for the past 12 months has been as high as 48, and that was the flash crash, as low as just below 15 here. And, we're kind of grinding here towards the bottom of that range for the last 3 months, really 4 months, going back to, October, November. What is this telling you now as volatility has quieted down in the overall markets, especially the SPX, which the VIX is derived from? What are you seeing? What's the big picture with volatility? There's always, when there's no fear, I always get concerned, and we're getting into that no fear territory, but it could last a long time.
Yeah, I think you definitely have seen a real uptick in fear. You think about the market didn't do that much. You had the one big day on Tuesday, but otherwise, we haven't moved, that fast or that much. It's not like, flash crash territory.
Right.
But the VIX, did make a decent move. It came back a bit today, but what's interesting, most times the VIX pops, it'll drop back, and before you know it, you're drifting back to where you were. But
right.
Last time it didn't do that was at the end of last April. It was very similar now. You had the Greek thing start to hit the market, and the VIX kind of started running a little bit before the market really started tanking, and then you had kind of a quiet week, and I was just looking at that chart on a Friday. The VIX had kind of drifted back, and then the levels were almost identical to where they are now. It was in the mid-teens, it shot up to the low 20s very quickly.
Yeah, I see that. I'm looking at the chart right here, and it's almost identical. It's amazing. Yeah.
Yeah, so if you look at that, it's like at the beginning of that period, it looked very similar to now. And, it drifted to 20, and I'm sure that Friday looked like, that was just a little blip. And then the next thing you know, within a week, the VIX doubled from there to 40. And we're a little spoiled because 40 is a really, really high number for it.
Right.
2008 was up to 80. That's incredibly high. 40 is very high. VIX does not spend that much time over 30 in the course of history.
No.
So no one's saying that we're going to have a second wave like that, but you got to keep that possibility in your mind, because it's similar in that remember with the Greek thing, it was always going to spread to Portugal and whatever the other pigs were.
Right.
The pigs minus the G because it's already in the G.
Yeah.
But so now. In a way, it's similar because everyone's kind of half expecting to wake up and two more Mideastern countries they're riding at the door of the dictator, and then worried about them torching the oil or whatever. I'm not a fundamentalist anyway.
Sure.
But it's similar in that there's a worry of this thing spreading, so you just have to keep an eye on the VIX exploding again.
Yeah, and again, that pullback the last couple of days has been pretty nice. Again, we kind of spiked from that 15 level up to 22.5, and sitting today around 19. And again, I'm looking at that chart, and it was back right after tax day, mid-April of 10. It did almost this exact same pullback. And again, who knows what's going to happen? We're not saying it's going to mirror it, but 10 months later, we've got a series of events that's definitely been percolating for a while. 3, 4, 5 countries you could even suggest in the Mideast. So it's not really a safe time to be selling volatility. I would think, be careful out there if you're betting the farm on selling your puts, because that's been definitely working for the last 10 months, but might not be the time to do it. When volatility gets low, this is when you're buying. Is that the case for you, Adam? You're buying some protection here for that, that possible move to the upside.
Yeah, I'd honestly rather buy actual options now with the VIX higher than it was, a couple of weeks ago, just because when you're buying actual options, you also have to think about time decay. So even if you're buying actual lower volatility, you have to worry about whether the underlying is moving at all.
Right.
You can buy very low volatility. If the underlying doesn't move at all, you're not going to lose much.
Right.
But it's going to just kind of be a grinding, it's just grinding stone. Nothing's happening. Whereas I'd almost rather buy options here at a higher volatility, now that it does seem like more catalyst that can make it move.
Yeah. Yeah, so now there's a little pulse in this market, and now's when you'd rather come in and like you said, instead of trying to kind of catch that knife on the bottom. It's like, for me, it's like trading in a stock. I want to wait for it to really jump off that bottom and then come back after that and take a little, test somewhere. that's when I want to start buying. I don't want to keep catching knives and try to, perfect a bottom. And for me, I've never been successful in doing that. So.
No. If I bought the bottom, that means I bought a hell of a lot of times before that.
Right.
I never just got into the bottom.
Yeah. I'd rather, and in the VIX right now, we've kind of got a defined area, around that 15 area that we know, if it goes below that, then we're really going to get slow. And so, this pullback here, 22.5 to 19, it might be the time to, start buying some, overall, exposure to the upside, as far as the VIX options go.
Yeah, I mean, that's not a bad idea. I was early buying the VXX puts into the volatility lift, so now I was trying, on today's pullback, I tried buying actual VXX to hedge it a bit, and then buy actual options on a few names.
Yep.
I don't think we're going back to the 15 VIX tomorrow.
Right.
I don't either.
I don't either.
But